Welcome to Talk Tickers, where we give you the key takeaways from crucial earnings calls.
Glad you're here.
Today, we're diving straight into the latest numbers from Digital Realty.
Yeah, they certainly had quite a bit to report for Q1 2025. Strong momentum is probably the headline.
Okay, so let's get into the snapshot then. What stood out?
Well, leasing volume was robust. We're talking $242 million at Digital Realty's share.
$242 million, okay.
And that broke down into $69 million in what they call the 0 to 1 megawatt plus interconnection segment. That was actually their second highest ever for that category.
Interesting. So strong on the smaller, more connected side too.
Exactly. And then you had $172 million in the larger over 1 megawatt deals.
Right, the hyperscale stuff.
Pretty much. And all that activity pushed their backlog to a new record, $919 million at their share. That's up 7% year over year.
Well, almost $1 billion in backlog. That gives them some visibility, I guess.
Definitely. And other key numbers looked good too. Core FFO, which, is a key metric for REITs like this.
Right, funds from operations.
Yeah, that hit $1.77 per share, up 6.1% from last year.
Okay, solid growth there.
And their same capital cash NOI growth, basically how their existing properties are doing that, was up 5% year over year too on a constant currency basis. So pretty healthy all around.
Seems like it. And they've got a lot of building going on too, right?
Oh, yeah. The development pipeline is significant. We're looking at $9.3 billion worth of projects, and they're expecting a stabilized yield of about 12.5% on that.
Okay. And they're finding ways to fund this. I heard something about a hyperscale fund.
Yes, exactly. That's a big development.
Sure.
Their first U.S. hyperscale data center fund, they're targeting $2.5 billion in equity for it.
And how's that going?
Pretty well, it seems. They've already got $1.7 billion committed in the first closing, so definitely strong investor interest there.
Good sign. What else jumped out from the results?
Pricing, new lease pricing hit a record $244 per kilowatt per month. That's up 10% from their previous record.
Wow, $244.
Yeah.
It really speaks to the demand environment.
It does. And speaking of demand, AI was a huge driver. Over 2/3 of their new signings were AI related.
2/3? That's massive.
It really is. And a couple of other points, they hit a sustainability milestone in Singapore, achieving 100% renewable energy coverage there.
Important for ESG-focused investors.
And they're expanding globally. They entered Indonesia through a partnership and launched a new data center in Crete.
Okay, busy quarter. So let's dig a bit deeper into that leasing performance. You mentioned the two segments, 0-1 milliW and the bigger stuff.
Right. So that 0-1 megawatt segment, the enterprise side, that strength is really driven by their focus on what they call the meeting place strategy.
Right, creating those ecosystems within the data centers.
Exactly. Customers need those low latency connections to networks, clouds, partners, and Digital Realty is providing that hub.
Makes sense. And the hyperscale side, over 1 megawatt.
Still very strong and importantly diverse. They made a point of saying the demand is rhyming rather than repeating.
Rhyming, not repeating. What's that mean?
It means it's not just one or two giant customers driving all the demand every single quarter. They said the largest lease signed in each of the last 5 quarters came from a different customer.
Ah, okay. So broad-based hyperscale demand. That's a healthier sign.
Yeah, it suggests a wider reliance on their platform across the big cloud and tech players, driven by digital transformation, cloud growth, and of course, AI.
You mentioned AI was over 2/3 of signings. Is that concentrated or is it fairly widespread within AI applications?
Well, they didn't break down the specific AI customers, but yeah, 2/3 implies a pretty broad base. It's likely everything from, training massive models to running inference workloads, all needing significant power and space.
Which brings us back to pricing. That record, $244 per kilowatt per month.
Exactly. That reflects the strength, particularly in that 1 million W category where AI often sits. Demand is clearly allowing them to push pricing.
And is the pipeline looking strong too?
They said it remains healthy and diverse, lots of engagement from customers and partners. There's just this need for large chunks of connected capacity in their core markets.
For all sorts of things, right?
Right.
Network optimization, hybrid clouds, AI.
Yeah, all of the above.
Okay, let's talk about their global platform then. Platform Digital. You mentioned the development pipeline is huge.
Yeah, it's grown by about 70 megawatts since the end of last year. Now totals 814 megawatts at their share.
814 megawatts. And how much of that is already spoken for?
A good chunk. About 63% is pre-leased. Mostly hyperscale deals, especially in Northern Virginia, which is, a key market.
Right. And you mentioned activity between regions.
Yeah, that was interesting. They're seeing EMEA, Europe, Middle East, Africa as a big importer of capacity. Lots of demand flowing there.
And where's it coming from?
The Americas and APAC seem to be showing strong enterprise export activity into EMEA. So companies in those regions expanding their footprint there.
So Platform Digital is really enabling that global scale up.
That's the idea. You can start small, maybe with a cabinet, and scale all the way up to a massive hyperscale deployment, and now get access for AI workloads too.
They must have highlighted some customer examples.
They did. It showed the diversity. A semiconductor equipment firm doing high-performance computing, a fintech doing high-frequency trading needing private AI, an Oracle partner building out private cloud.
Wow.
Also a blockchain provider, a big Fortune 500 payments company needing local capacity for compliance, and naturally, an AI inference and training company needing that core connectivity.
Quite the range. And the global expansion continues. Indonesia and Crete.
Yep. Indonesia is via a partnership called Digital Realty Persama, and Crete, that's Heraklion 1, boosting connectivity in the Eastern Med.
Plus strengthening the network itself.
Right. Big collaboration with Console Connect. That expands their service fabric, their interconnection platform, to over 100 new third-party data centers and adds 75 new cloud on-ramps.
So more connection points, more options for customers.
Exactly. And they also deepened their relationship with Microsoft, adding 3 new Azure ExpressRoute locations, Atlanta, Brussels, Vienna. That brings their total to 15 Azure on-ramps across 4 continents.
Okay, that's a lot of expansion, a lot of building. Let's circle back to funding. That U.S. Hyperscale fund sounds like a key piece of the puzzle.
It really is. Targeting $2.5 billion in equity, aiming to support around $10 billion in total investment. Getting $1.7 billion in the first close is a strong start.
And how does this model help them?
Well, it lets them develop these large, capital-intensive hyperscale facilities, but share the investment load. They bring in institutional partners.
So less capital needed directly from Digital Realty's balance sheet for each project.
Basically, yes. And they also earn fees for managing these assets, so it can enhance their returns over time. It's a way to keep growing rapidly without overstretching their own resources.
And they're still doing capital recycling too, selling off some assets.
Yeah, they said they're on track with their 2025 plans for that. Selling mature or non-core assets and reinvesting the proceeds into higher growth opportunities like that development pipeline.
Okay, so strategically managing the portfolio. How's this all flowing through to the bottom line and their outlook?
Pretty positively, it seems. They actually raised their full year 2025 core FFO guidance slightly by 5 cents. The new range is $7.05 to $7.15 per share.
Okay. Any reason for the bump?
Mainly updated foreign exchange assumptions, but they did say that on a constant currency basis, they're trending towards the high end of their original range anyway.
Got it. What about revenue and EBITDA?
Those guidance ranges were also increased by $25 million each for the full year 2025.
And that huge backlog gives them confidence looking further out.
Absolutely. They specifically mentioned enhanced visibility for growth into 2026 and beyond. Their 2026 backlog is already up over 40% just since the start of this year.
Wow, that's significant forward visibility.
It is. And importantly, for managing inflation risk, over 85% of their new leases have rent escalators built in either fixed bumps of at least 4% or tied to CPI.
Smart. And the balance sheet itself?
Yeah.
Debt, interest rates.
Looks pretty solid. Their weighted average interest rate actually ticked down slightly to 2.6%. And the vast majority of their debt, 93%, is fixed rate. Plus, 96% is unsecured, which gives them flexibility.
So a stable financial foundation despite the heavy investment.
That seems to be the picture, yeah.
Okay, one more area of sustainability. You mentioned Singapore. Anything else?
Yeah, they also highlighted the opening of a new data center in Frankfurt called Friday Team. It's a 16 megawatt facility, but designed with a specific focus on sustainability and runs on 100% renewable energy.
So making tangible progress there too.
Seems like it. It's becoming, table stakes for many customers and investors.
So summing up the investor angle here, it really feels like they're hitting on all cylinders, especially with AI demand.
I think that's fair. The demand environment, particularly AI-driven, is clearly very strong. Their global interconnected Platform Digital, is a major advantage.
And the new funding model seems like a smart evolution.
Yeah, the Hyperscale Fund diversifies their capital sources and potentially enhances returns. Add in the record backlog, strong pricing power. It paints a picture of continued growth potential.
Plus the sustainability focus, which is increasingly important.
Right. It ticks a lot of boxes that the market is looking for right now.
Okay, let's shift gears slightly. Time for our This Is Not Financial Advice segment.
Yeah.
Given this backdrop, the AI boom, digital realty's success, the new fund, what's an outrageous but plausible trade idea you've been thinking about?
Okay, remember everyone, purely speculative, definitely not advice. Do your own research, consult professionals, all the usual caveats.
Absolutely. Duly noted.
So here's a thought experiment. We see this massive demand for AI compute driving power densities way up in data centers. Traditional air cooling might struggle, right? It gets expensive and maybe less effective at those levels.
Right. Heat is a major challenge.
So a potentially interesting speculative idea could be going long companies that are really leaders in advanced liquid cooling solutions for data centers. Think direct-to-chip, immersion cooling, that kind of cutting-edge stuff.
Because if AI needs more power, it needs better cooling.
Exactly. Those companies could see a huge surge in demand if liquid cooling becomes more mainstream for AI deployments. Now, for the paired outrageous part, you could theoretically consider a paired short position. Maybe target REITs that have heavy exposure to, say, older suburban office parks with really long leases, assets that are hard to convert to anything else, certainly not data centers.
The idea being those assets might face headwinds.
Yeah, the thinking is, in a world pouring capital into digital infrastructure like data centers, these older, less flexible office assets might see slower growth, maybe even declining values, especially if remote work trends persist.
So long the enabling tech for the future, cooling, short the potentially less relevant assets of the past, some office.
Sort of. It's a thematic play on that infrastructure shift. But again, highly speculative, lots of risks involved, could go completely wrong. Just a thought experiment based on the trends we're seeing.
A fascinating one, though. Definitely food for thought. Okay, well, that wraps up our deep dive into the latest digital realty earnings call.
A lot to unpack there.
Indeed. We hope this breakdown gave you some valuable insights into what's happening with them and the broader data center market.
For more concise earnings call summaries, keep tuning into Talk Tickers.
And remember, as always, this is purely for informational purposes. It is definitely not financial advice.
Be sure to do your own homework.
We'd love to hear what you think about these developments. Feel free to join the conversation online.